Should one consider their cash value of their life insurance as a resource for an income stream in retirement?
Chris, my thought is, A, they certainly could, okay? But B, it depends on why they bought the life insurance, okay? If you're going to take an income stream, that's going to reduce the death benefit by a like amount. So if you had a $100,000 policy and wanted to leave $100,000 the day you passed, then whatever income stream you derive is going to be reducing that $100,000 benefit. So it depends a great deal on why you purchased the life insurance and the need for the life insurance.
That's a fair point, Mike. Jeff, do you want to comment, or you want me to spout up?
No, that's I'm there. Yeah, you're gonna, if you're borrowing against that the cash value of that policy, certainly it's going to it's going to depend on the kind of policy that you have. There are some cases where it won't reduce the benefit when you're borrowing against it, and then there are some cases where it would. So again, it just depends on the situation.
I'm going to generalize here, and I'm going to say generally you should not be taking that retirement income from your life insurance. It's very much on point with what everyone else said. That depends on what the purpose of that life insurance was. But I think a lot of life insurance, cash value life insurance, is sold with a little bit of a flim flam going on, where they say you're going to have tax-free income from your cash value in retirement. And it is possible to borrow. That has a cost to it. You may even be able to withdraw some money from a life insurance, but generally you're going to be borrowing in the form of a loan, and that has ongoing costs forever. And I've even seen examples where the policy blew up, the person got hit with a huge tax bill because they'd taken out a lot more from the policy than it had for its premiums. And in the end, it didn't last until they died and got the death benefit to pay off the loan. And so they ended up with a massive income tax unexpectedly that was pretty sizable. And so, I think people should be very careful about borrowing from their life insurance. It has been that people sold it with the intention of using it in retirement. And if that's the case, have that in mind. You may want to sell your policy. You may want to cash in your policy, but think of the reality that at some point you're going to have a tax event potentially if there's gain over and above what you paid in premiums. I just think most people, when they have it as life insurance, they expect it to be for life insurance, not for income. So the devil's in the details, in all fairness, but by and large, don't tinker with borrowing out cash value, because you may blow up your policy and it may not be there when you expect to have the death benefit, which is generally why people have insurance.